going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So everybody has mentioned to me about medical properties trust. What am I doing with them? What am I doing? What am I doing with medical properties trust? Now, it's one that I'm closely watching because they're in a little bit in damage control. I'm going to do a quick review and I'm going to show you a possible better alternative to medical properties trust that I'm looking at even more closer. I haven't made the decision to put the finger on the trigger, but starting to hike its dividend, so I'm going to show that to you. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out this REIT right now. So medical properties trust is sitting at $3.83. They've been way down. Now, did I own them at one point? Yes. When they hit a nosedive, I got rid of them. Did a little tax loss harvesting. It's one that maybe I'll consider rebuying in the future. Could there be a reverse split in the future? It could be. Sitting at 383, I would not be surprised. I mean, it's losing its value. It's not jumping up at all. And it's in the danger zone for, honestly, for a reverse split. I can see it happening. Doesn't look attractive to investors. Okay, significant drop. One point it was almost $25, and it's down to 383, almost 350. Okay, so look at what I did with IVR. I bought a huge dip, got the dividends, sold it. Okay, can I rebuy it? Maybe. Medical properties trust, I see a reverse happening. Would not be surprised if it's 3 for 1, 2 for 1, 5 for 1, or I'm sorry, 1 for 5 if you want to say it in reverse because it's a reverse stock split. So, or 1 for 3, 1 for 2, even 1 for 10, I could see is a reverse split. So that could be a strong possibility. I'm not giving financial advice either, but they're hit hard. But I'm going to go over some positives with them. I'm not going to go over Stewart Health or anything. I mean, that's a big issue. You can do your research and due diligence on them. But 400 properties, okay? 9 countries. So the United States and 8 countries internationally. North America, South America, Europe, okay? Their diversification with their medical, okay, their medical properties, 61% is acute care hospitals, 16% is behavioral health facilities, 11% is post-acute care facilities, 1% is freestanding ER urgent care facilities, 11% is other. So they are kind of big. That's the one thing that has them going. But they were hit hard post-pandemic. And that really hurt them. I mean, they were having some issues before that. Their revenue was doing okay, but they got some issues. And with Stewart Health, you can look up with Stewart Health Medical Properties Trust. That is a huge problem. But let's look over the most recent trends. I'm not going to go over funds for operation. I'll go over their dividend history. So look at their revenue in December 2023. It was negative 147.26 million. March, it was 281.06 million. It was down 22.26%. Then 275.19 million. It was down 21.29%. Then September, 247.07 million. It was down 22.27%. So it's been down, okay? Still, you see the trends. At least it's not negative. So that's a good thing. So but I'll show you some yearly trends as well. So there are some positives. Okay, 2019, 854. This is annual data in millions US dollars. 2020, 1,249. 2021, 1,544. 2022, 1,542, and 2023, 871. So it did increase from 2019 to 2023. So if you compare those two numbers, that is a good thing, but you still got a little bit of work to do. And I'm going to jump to the dividend history. And look, this is when things were good. Quarterly dividend 22 cents, 2016 23 cents, 2017 24 cents, 2018 25 cents, 2019 26 cents, 2020 27 cents, 2021 28 cents, 2022 29 cents, 2023 15 cents, so there's a cut. And then in 2024 8 cents. So that's another half slash right there. So its dividend growth in 5 years is 19.55% in the negative. You bought one share, you made 32 cents of the 8.36% dividend yield. So you have to be careful with that. You're seeing the trends of the dividend decrease. That should be raising red flags with the dividend decrease. I think it's darkest days. I mean, could I throw some play money in and throw $400 in? Maybe. I could do that. Am I going to do it soon? Probably not. I'd have to think about it in the next few months if I would do that just for play money. So here's the problem. It's down. I mean, that price is down. Something's not right. And Stewart Health, a lot of negative press. Now, there were people they appeared to be giving falsified information on Medical Properties Trust on the internet. But they got a little bit of work to do. Now, I'm going to show you a real estate investment trust in the medical field that is something that I'm watching closely. Am I going to pull the trigger on it? No, but I feel way more confident in that one than I do in Medical's Properties Trust. We're going to check that out. That one's on the downswing a little bit, but it's not too bad. HealthPeak Properties sitting at 1966. It's down, but it appears to be a little bit more stable. A dividend yield of 6.10%, a PE ratio of 41.85. The average volume is 4.33 million. The market cap is 13.75 billion US dollars. Year range is 1078 to 2326. Day range is 1943 to 2012. Previous close is 2032. So there is some positives with that, and I'm going to go over that. Their strategy is to invest in healthcare real estate that benefits from the universal desire for improved health. In particular, they are focused on lab and outpatient medical favorable sectors where over the past 2 decades, they have built unique scale and deep relationships. They believe that their operational expertise and entrepreneurial approach will benefit all the stakeholders. At HealthPeak, they believe the power of clarity. That a simple strategy, unwavering focus, and deliberate actions enable consistent execution of their vision for long-term growth. Is an innovative company at the forefront of providing premium real estate dynamic healthcare industry. They are committed to delivering the value of their shareholders, customers, and employees. They have a long history, starting as healthcare property investors in 1985 with an IPO in the New York Stock Exchange, growing into the leading healthcare REIT and earning our way into the S&P 500 index in 2008. So we got some good stuff there. We got a little bit more good stuff. And I'm at the bottom right there, and they have a total of 718 properties. I'm looking at Brookdale Senior Living. Okay, that's and there's a lot of them. There's Texas, Colorado, Tennessee. They have Life Care Services, Florida, Alabama, Michigan. Because there are a lot of facilities. These are really good. So they have a lab operating. There's a lot in Boston, San Fran, San Diego, San Francisco. Outpatient medical, a lot in Seattle, Washington. Salt Lake City, Houston, Texas. That's pretty serious. They list on their website all the places that they are either in a joint venture with or which hospital systems they are with. So this is pretty serious. There's a Charisma healthcare system in Greenville, South Carolina. A lot of outpatient medical. This is quite quite diversified and quite powerful, honestly. So you're seeing how they are as a company, okay? That I'm quite impressed. I mean, they updated a lot on their website, and they're just getting bigger and bigger. That's one positive thing. They're getting bigger, they appear to be stable, and they're cheap. Now, let me go over the revenue trends and dividend history. Before I go to the revenue trends, I just want to go to the increase, their FFO, third quarter 2024. The increase the midpoint of both FFO and adjusted it and AFO guidance by 1 cent per share. And increase the total merger combines same store cash NOI growth guidance by plus 50 basis points at the midpoint. So, I mean, there's a merger and their FFO is decent, okay? So it's still, I mean, just reading that increases my confidence over Medical Properties Trust. Now, I'm going to show you the revenue trends and dividend history. We have some good numbers, okay? 2019 annually in millions US dollars, 1,240. 2020, 1,644. 2021, 1,896. 2022, 2,061. 2023, 2,181. So we have an increase in revenue from 2019 to 2023. That increases my confidence. Am I going to buy them yet? Not yet. I have CareTrust REIT. I have to really evaluate, make some decisions if I'm going to buy them. Are they up there on my radar? Yes, I'm just going to tell you. So let's jump to the dividend history. They're seeing some things before the merger, okay? 37 cents. Then you can see the pandemic right here, 37 cents to 30 cents. And right here, it's 30 cents right here. So yes, there was a decrease. The revenue trends are going up, and there's a lot. I mean, they just literally merged with somebody. So, you know, that's going to take a little bit of work, but they're not decreasing it twice. And they're starting to get bigger, which has a lot of confidence in myself to maybe consider buying it in the future, but I'm not going to buy it. So I wanted to show you a better alternative than Medical Properties Trust. I really hope Medical Properties Trust improves and becomes the juggernaut REIT that it once was. I'm pretty sure it was part of VNQ ETF inside of it. HealthPeak is one that excites me, and I'm very close pulling the trigger on it. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will try to squeeze in a video for you on Tuesday. If not, I will do a shorts. I can guarantee you I'm going to do a shorts if I can't squeeze in a video. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money, so be aware and do your due diligence. It is best to seek financial advice from a financial advisor, so go to a financial advisor and go for financial advice, a tax advisor for tax advice. The risk is high in a REIT like this. So just be aware if you do an investment in them, the risk of it. Anything you do, there's a risk in it. So be aware of those type of risks and do your due diligence.